Hey everyone, welcome back to Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So today we're just going to jump into some earnings. We're going to look at IREN. They did release their earnings yesterday, so we had some advancements in regards to their AI expansion, as well as some updates to the Bitcoin mining side of things, and then we'll just get a better idea kind of how the revenues were looking for the prior quarter, and then what we might expect going forward. So we'll just jump right into things here. Flipping over, obviously, IREN posting record revenue of 53.7 million of operating cash flow, 18.9 million of profit after tax. So that's what NPAT. That's just an acronym. So essentially, that's just their net profit after tax. So posting $19 million of profit there. We do see they have a 75 megawatt liquid cooled data center expansion. They're going to bring that on at their Childress facility. Naming that Horizon 1. So also we do see them developing a new 600 megawatt Sweetwater 2 site. So we do know that they have their plans for their 1.4 gigawatt Sweetwater site. Now they have actually expanded upon those plans and brought kind of the total capacity or total potential capacity up to about 2 gigawatts. We do see here, obviously kind of scrolling down, they're excited to announce this. So firstly, Horizon 1, the new 75 megawatt direct to chip liquid cooling deployment at Childress, going to be for AI HPC, and then they've got that new 600 megawatt Sweetwater 2 site located just 28 miles from the existing Sweetwater 1 project, expected to create that 2 gigawatt data center hub. So really massive energy pipeline here for IREN. Looking at their key growth initiatives, obviously their Horizon 1 75 megawatt liquid cooled Childress data center expansion is going to be the first to come online. That's going to feature direct to chip liquid cooling, and it's designed to support the new NVIDIA Blackwell GPUs. So with a 200 kilowatt rack density, these they're going to be able to support the highest end GPUs. That's what all kind of the big hyperscalers are looking for. They want to ensure that the racks have the right density to be able to run these chips. We do see here there is a scarcity of liquid cooled data center capacity, and then couple that with the increasing demand of these new Blackwell chips coming to market, it's really going to put a kind of constraint on the power sources available and which are actually going to be capable of housing these new chips. So definitely great to see them kind of getting ahead of the market and really positioning themselves to be able to house kind of the next gen technology here. Obviously, kind of the initial 75 megawatt thing is focused on multi-tenant AI co-location opportunities. So we might be looking at something like similar to Wolf, where they've kind of secured a partnership for 70 megawatts of infrastructure that with Core 42. That being said, IREN, they might have a couple of different partners. They're just going to do whatever makes the most economic sense. So they're not going to settle for kind of a mediocre deal. They're going to look to really capitalize on that value there. Try to get some premium back in the stock. We did see TeraWulf, Cores, and other really pump when they did announce deals with AI hyperscalers. We also saw Cypher pumping quite a bit when they had their investment from SoftBank. So I'll get into that again a little bit later. There is kind of a little bit of a connection. We can make the connection, but we're not going to assume that that is what's going to play out. But I will get into that later on. So obviously, creating that 2 gigawatt Sweetwater data center hub, finalizing that 600 megawatt grid connection agreement. The grid network studies are complete. They've secured the land, and it's located near the existing Sweetwater 1. It's also located near Abilene, Texas. So why that's important, essentially, why would they reference the town of Abilene? And I'm going to get into that right here. Basically, Stargate, we did see that they're going to invest $500 billion in AI data centers over the next 4 to 5 years, and guess where some of these data centers are being built? It's in Abilene. So obviously the first data center associated with the $100 billion Stargate venture from OpenAI, SoftBank, and Oracle is taking shape, 875 acres in Abilene. That being said, the company that is currently building out these facilities, it's not IREN. So we do see, obviously, it's just kind of interesting to note the location of these data centers, because if they are building data centers to be able to interconnect different data centers as well, might be a really beneficial thing to these hyperscalers. It might be very enticing for them to kind of look at acquiring some of the power available. If there's up to 2 gigawatts within a very close proximity to their current data centers, and they're looking looking for more and more AI infrastructure going forward. Again, they're going to invest $100 billion per year. So really interesting. They've kind of, the location of the IRES Energy facility of Sweetwater, really good, really beneficial. And again, there's going to be a lot of kind of developments going forward in Texas. It is anticipated to kind of become the AI data center, Bitcoin mining kind of hub of the United States, at least. You know, the current administration does want the U.S. to be a kind of innovator and kind of a leader in terms of AI compute. So we do see, obviously, when these data centers are complete, they're going to power the cutting edge AI systems from OpenAI. There's a whole bunch of other stuff getting in there. I'm not going to get too far into it because it's more to do with the other company that's actually building out this first data center. But I did just want to allude to the fact that it is interesting that they're building such a substantial amount of energy infrastructure right next door, essentially, to some of the biggest players in AI and HPC. So I wouldn't be surprised, just as we saw SoftBank investing into Cypher, if we start to see some of these companies recognize the undervaluation of data centers relative to the traditional data center valuation. I've talked about that before. So Bitcoin miners are generally valued at a fraction of the price as a traditional data center, despite lots of the times being much newer and much more capable of being able to house some of these more advanced chips that are coming to market these days. But yeah, very interesting, the location, right near some of the biggest hyperscalers and their facilities that they're building out. You know, I would not be surprised to definitely see some more interest in these Bitcoin miners from the hyperscalers. Moving on, though, we do see the design work is underway for a direct fiber loop between Sweetwater 1 and 2. They're focusing on high monetization pathways. They want to prioritize the whole of site single tenant opportunity for Sweetwater. So that's going to be massive, and there's not going to be a ton of companies that can really come in and put down the money to fill a 2 gigawatt data center, even though, you know, the additional 600 megawatts won't be online for, you know, another 2 years. But by the end of 2026, to have 1.4 gigawatts of capacity available, that's going to be crazy. So just for reference, Core Scientific, they basically have the optionality for up to 500 megawatts of HPC, and it works out to, they end up making, you know, like $750 to $850 million per year. So this fully built out is going to be 3 times the potential capacity as the original Core Scientific deal. So we can kind of extrapolate that, you know, we're looking at billions of dollars of yearly revenue once on a fully deployed basis for this kind of project. So really interesting. Obviously, IRES Energy has done a great job scaling their Bitcoin mining operations, as well as kind of getting into that AI HPC. They do have current revenues, unlike some other miners. But that being said, they're approaching it from kind of a cautious, kind of cautiously optimistic standpoint, I'll say. They're not looking to rush into a deal. They don't want to sign a deal on unfavorable terms. They want to make sure that the value they're bringing in with AI HPC is going to exceed the potential value of the Bitcoin mining operations. Otherwise, it doesn't make sense to be switching from Bitcoin mining to AI compute if you can't at least outperform or kind of, make financial sense for that decision. Obviously, their Bitcoin mining operations have been impacted a little bit, not their current operations, but their future growth. They were going to target 57 exahash. They've lowered that to 52 exahash now. The 50 exahash on track for the first half of 2025. You know, I wouldn't be surprised to see them smash that, though, and, you know, meet the 52 within that timeline. They've done a great job at consistently under-promising and over-performing. So I really kind of expect the same from IRES Energy, and it's what I've liked from their company for so long. You know, they've just done a great job at consistently meeting those growth targets, unlike some other peers. Obviously, Horizon 1 is adjusting that plan, so just additional energy that was planned for Bitcoin mining is now diverted to AI HPC, similar to what we've seen with other companies as well. Obviously, they do have the lowest cost production in the industry, 15 joules per terawatt fleet efficiency, or terahash, sorry, fleet efficiency. That is the lowest amount, so the highest efficiency in terms of fleet. They've got a really low power cost. They have transitioned to spot pricing, which I do prefer. Before, they were doing a bit of an energy hedging strategy, where essentially they kind of had a fluctuating rate they were paying energy prices. So some months, you know, they were paying next to nothing, and then other months during during times of high stress, they were paying crazy amounts. It kind of affected the way different earnings reported. So like around the summer and of course around the winter during times of high stress, so when it's really cold or really hot, it's going to cost you more for that energy, and then your earnings around those times is going to be a little more unpredictable. You're going to have additional costs. So by transitioning to this spot pricing, we just get a little bit more kind of consistency around the energy pricing for their infrastructure. We do see they're running a 75% hardware profit margin as of January 2025. Their U.S. domestic issuer status is confirmed to be adopted from the second half of 2025. So they are transitioning their headquarters to Texas. We do want to see IRES Energy kind of really kind of come domicile within the U.S. They're going to have more favorable regulation, as well as probably be able to access, more accretive relationships with business partners, access to capital, that kind of thing. Obviously, we'll look at the second quarter results here. So they had a 129% increase in Bitcoin mining revenue, coming in at 113.5 million, as opposed to just shy of 50 million in the prior quarter. They did mine 1,347 Bitcoin, as opposed to 813 in the prior quarter. So you can see, essentially, they've been almost not quite doubling, but that's quite a big increase in production there, just from quarter to quarter. So really good job bringing hash rate online. IRES Energy in 2024 to 2025, they grew from 5.5 exahash to 31 exahash. So that was insane growth, just blasting all the other miners out of the water, and then bringing the efficiency down so well. So I've really been impressed with the way IRES Energy has been able to scale both the size of their hash rate and their efficiency. Obviously, scrolling down, they did have some other costs attributed to various expenses, but at the end of the day, they did bring in a net profit after tax. That's what we want to see. It is important to note, IRES Energy doesn't hold any Bitcoin on their balance sheet. They sell it as it comes in to fund their operations, to fund their growth. It's not necessarily a bad thing, but it is important to note they do not kind of get any benefit from the FASB accounting standards. So we've talked about kind of the revaluation of digital assets. They don't have any Bitcoin on their balance sheet, so no FASB accounting for them. That being said, they're still turning a profit, so it looks good. Scrolling down here, do see their adjusted EBITDA, 62.6 million, 52% EBITDA margin, so far exceeding 10 times the margin of the prior quarter. Sorry, excuse me. And you see here, crazy increase in EBITDA from the prior quarter to here in terms of cost. Yeah, again, their net profit after tax expense for the period, coming in at $19 million. So really good job. We want to see our Bitcoin miners being consistently profitable, as well as scaling the size of their operations, and and if they can bring the efficiency and the cost to mine down simultaneously, it's even better. So big things happening at IRES Energy. We've got them basically hyperscaling their Bitcoin mining hash rate, doing an amazing job, really bringing that efficiency down to that industry low, as well as kind of capitalizing on the potential and further increase and demand in AI HPC compute infrastructure, securing additional kind of energy pipeline, so really setting themselves up for success in the future. Flip over here. I just want to show you here. It's just an interesting picture of IRES Energy. So this is their Childress facility right now, and essentially you've got GPUs running and you've got ASICs running side by side. So this really shows you kind of the state of the art operations they have going on to be able to be running these two kind of different businesses side by side and doing it successfully. It's really impressive, and I'm excited to kind of see what they do going forward in terms of kind of the continued AI adoption. Again, we've seen so much premium kind of applied to those companies who've really secured deals in the AI sector. So for IRES Energy to have such a large amount of energy available, obviously the 1.4 gigawatts set to be online by 2026, it's going to be very enticing to the hyperscalers. I'd like to see some expressed interest. Obviously, again, management has said they're not going to explore any deal that isn't accretive to the shareholders, so they want to be sure that they're going to get more value than what they could get from Bitcoin mining, and I do like to see that. Obviously, management has done a great job in the past following through with what they've said, so I expect the same going forward. Flipping over, this is my Bitcoin miner tracker. So again, we just track kind of monthly production as well as a bunch of share price metrics and fundamental metrics just to compare all the miners against each other. So we do see here Iris Energy, not able to surpass their prior monthly mining output, but only one company really did, so not really surprising. We do see here though, in terms of Bitcoin mined per exahash, so their efficiency or their uptime, again, just ranking in the top percentile of the Bitcoin miners. If we scroll down a little bit, actually I'll flip back to 2024, give you an idea of how they did in 2024 in terms of production. So here, obviously, in terms of Bitcoin mined per exahash, just green across the board. In terms of production size, just a few different months, they weren't able to kind of beat the prior month. That being said, it was a really tough year for Bitcoin miners. There was a halving event, there was network difficulty increase, there was an increase in the network hash rate. So really hard to kind of consistently beat that prior month production output. But we did see Iris Energy kind of ranking again in that top percentile. In terms of efficiency, so basically the top score you could get was a 12. Iris Energy scoring 12 out of 12, meaning they ranked in the top percentile of uptime / efficiency, whatever you want to call it, 100% of 2024. So really good consistent efficiency from Iris Energy. We also see, in terms of kind of production, beating the prior month, no miner really kind of excelled in this front. As I said, it was a really tough year. Kind of Bitcoin network or Bitcoin mining rewards were affected by various different kind of factors there, but doing really good. Definitely kind of up there, top of the Bitcoin miners. Again, though, we'd like to see that continuously going up. Being able to beat the prior month's hash or prior month's output just means you're consistently adding hash rate, and then that's what we want to see kind of going forward. We definitely want to see miners continuously scaling those operations, bringing on more hash and mining more Bitcoin so they can continue to scale the other aspects of their business as well. So yeah, flipping over to 2025 now. Obviously here, again, this document will be available to all of you guys to reference. I do have a Google Drive linked in the description, and that's where I keep all my documents. You're welcome to go check them out, use them, reference them. But I do reference them in these videos a lot. So obviously looking at, this is kind of the production or kind of the fundamental side of things. Obviously 31 exahash ranking as one of the bigger miners. Anyone over 30 exahash I consider kind of a large scale miner. At about 4.5% of the network. They're record-breaking efficiency here, so yeah, top tier efficiency. The one thing they do lack in, obviously, the Bitcoin HODL, but it's a different strategy. They just sell as it comes in. It's not necessarily bad. That being said, they aren't going to benefit on certain kind of accounting measures. They do currently have 510 megawatts under management here, so kind of a middle tier in terms of current size of operations, but their energy pipeline in terms of future pipeline here, really rivaling Cypher over here. So 2,750 megawatts is what I have expected right now, is what's been announced with those new developments at Sweetwater. We do see here, in terms of growth last cycle, completely blowing everyone out of the water. Look at that, guys, almost 500% growth in their hash rate, so really insane, far exceeded their targets. And then we have their 52 exahash target this year, and just interesting or important to note that has been revised down from 57 exahash. So about 68% implied growth to that target from the current hash rate. Looking at kind of a 2025 revenue estimate of about $540 million here. Kind of the 2025 revenue divided by market cap. Again, not the most undervalued in terms of other miners, but kind of middle of the pack. So shows you again, doing very well in a lot of metrics here, and then doing pretty well in some of the other metrics. They do have some HPC revenue, so that's my non-Bitcoin mining revenue on a yearly basis. Looking at about 16 million currently. That's going to be increased once they bring this 75 megawatt Horizon expansion online, sorry. So yeah, we will be watching that going forward. Obviously interested in a deal, but they haven't secured anything as of yet. Moving down here, market cap. In terms of market cap, they're kind of a mid cap, I would say. Not quite the large cap, is generally kind of 3 billion or more I'm looking at for large caps. So Iris Energy, kind of a mid cap, mid scale, or large scale mid cap miner. So for them to have a similar kind of market cap as some of these other companies with massive kind of operations as well, it just might show there's a little bit of an undervaluation there. We do see their enterprise enterprise value just shy of their market cap. So yeah, not quite exceeding the market cap like we would want to see, but you know, it's okay. It's not the worst thing. Doing better than some of the other ones here. In terms of shares outstanding, pretty good for their market cap. Obviously, you look at Cipher with a $2 billion market cap. They're at almost 350 million shares, whereas IRES Energy almost 2.7 billion market cap and 215 million shares. So a little bit less than kind of some of the other peers valued on a similar market cap basis. Might just show you that they kind of dilute. They might dilute a little bit less. That being said, last year was quite a big year of dilution, but it was also a massive year of growth. So that's what I talk about. The growth was accretive. You know, if they scaled their hash rate by almost 500% and they diluted by 160%, I consider that accretive. We do see their last reported cost to mine per coin. It's actually 29,800 now, I do believe, as per those that recent earnings. We see their market cap divided by exahash minus kind of their HODL, because they don't have a HODL. You know, again, they're being valued on this metric kind of middle of the pack. Same with their EV divided by hash rate. They're definitely undervalued relative to peers. EV divided by revenue, you know, middle of the pack. Debt to equity, so so pretty good debt to equity ratio here, kind of again top percentile. Price to book ratio being valued a little bit more than kind of some of the other peers, still less than Mara. That being said, you know, these miners, look at Wolf here, look at Cores. Course is actually not available because they were coming out of bankruptcy, so they don't really have some of the same metrics available right now. But Core is here being valued at 6.61 on a price to book ratio, and that's basically due to the AI deal that they've secured. IRES Energy is a far stronger Bitcoin miner than TeraWolf, and they just don't have that concrete deal secured yet. As soon as they announce that they've got a deal for 75 megawatts, that's going to exceed Wolf's current deal. Theirs is only for 70 megawatts right now, and then if they announce interest in their 1.4 gigawatt facility from hyperscalers, I really do believe that's going to garnish some premium on the stock. Obviously, coming down, we do see here the institutional ownership coming up, so good to see it increasing still. The last I saw, it was like 26%, so increasing here to 32%, and we've got an analyst price target of 22.40, just the average price target, so pretty good upside just to the price target here. Flipping down, I did share this with people as well, so this has been my kind of accumulation buy range tracker, that kind of thing. IRES Energy came down to kind of our entry range here. It did run up to about above $13, so good returns on that trade. That being said, it is down a little bit today. We'll flip over to the chart. I'll take a look. So just looking at things here. Obviously, we take a look on the weekly chart, start on the high time frame. You know, looking pretty good on the weekly. We've got stock RSI quite oversold. We've got our DMI. You want that blue line above the orange line like this, but what I want to see is the blue get above this red ADX line, and I want to see the ADX line curling up with it, really supporting that that DMI plus line here. So we'll get rid of that. We'll get rid of that. We're looking at our MACD here. So again, we do see it is a red histogram, but kind of curling back over. We do want to see that bullish cross of these two moving averages here. And then if we flip to our RSI, oops, sorry about that. If we flip to our RSI here again, you know, just higher lows on the RSI, maybe a little bit of rejection here. We want to see this low potentially hold ideally, and then hopefully get another push up again. Look for that bullish cross. That being said, you know, this is the weekly time frame. It could take a while to play out. In terms of our moving averages, our oscillators, and kind of just overall, you know, they are technically a buy or a strong buy on the 1 month. So 1 week buy, on the daily chart a buy, and on the 1 month a strong buy. They have kind of come back here. That being said, I'm going to zoom into the low time frame. We might be able to get a better entry, kind of closer, further down. I don't generally like to buy into these pumps. I don't buy resistance. I like to position myself on the retracements and then take advantage of the pumps. So obviously, we'll flip. Let's start on the daily here. Okay, coming in, you can see we did get rejected here. Would see this resistance there. So not quite, wasn't quite able to break out here. We're back kind of just below this trend line. So we do see here again, if we take a look, yeah, so basically what I'm looking at on the low time frame first, this is going to be a higher risk entry. Essentially, we're looking at this Fibonacci golden zone from about 1015 up to about 1084, 1085, something like that. You know, we want to make sure that we're holding these lows here and then so then we can have a chance to kind of go out, break out of this downtrend, and then actually get another push up. I want to see us kind of push up to these highs, break them, hold them as support, and then continue on to potentially what could be our cycle high going forward. Then we've got this level here at kind of $8.25. That's what I'm looking at as a higher time frame Fibonacci golden zone entry. So I'll show you here if I take my Fibonacci tool essentially from the low to the peak here, and then you see kind of, we do see there's a little bit, it's just a bit above our 786, but it is confluence of horizontal support, so that's why I have it there. Again, you want to look for that confluence of support. So Iris Energy, maybe you're looking between 1082 to about 1017 there. We do have this 200-day moving average curling up. You can see how it kind of dipped below, acted as support a few times, and again acted as support here. So we see the 200-day coming up, coinciding with our Fibonacci golden zone. That could be a good area for a little bounce play in Iris Energy. Otherwise, look for larger buys kind of down to this $8.25 level and maybe a little bit lower. We'll get even into the lower time frame because we really want a good idea of what's happening today. Obviously, we had this big rejection here. We are holding this low for now, so we'll see what happens. Essentially, this is kind of just a bear flag structure. We look here, say there and here. Yeah, so, just that bull flag structure, so still looks good. But that being said, again, if we see this breakdown, just expect it to come back, a normal retracement back to these levels. Again, I'm not interested in buying resistance up here. That's not really what we do. That's how you end up getting on the wrong side of a trade. What we could do rather than that is just look at a couple scenarios and what we would do. So either we're going to get a continued breakout of this and we get that higher low, and then we're able to go up and attack the highs. So what you want to make sure is when we come back to this retest here, you want to make sure that your low time frame momentum indicators can support that further move up. If it looks really overbought down here, really overheated, then it might just break back down and have more consolidating to do. But if it is able to break out, hold this as support, and then have the momentum indicators kind of reset and support our thesis going forward, then this is a pretty good entry here. So the reason we wait for confirmation is the difference between the entry. If you enter at 1260 here and it breaks down, you miss your opportunity to buy down here. Rather than just waiting, if you wait for confirmation, even here, you're only buying about 3-4% higher than what the current price is. So we're not trying to perfectly time top or bottom, because that is how you're going to get caught offside. It's how you're going to catch a knife. You're going to buy resistance, or you're going to buy into something before it's shown that it's actually wanting to reverse, or it's shown bottom structure. So again, waiting for that confirmation, less risk. Your entry's a little bit higher, but that's okay because the most likely target is higher than your entry. So really pay attention to the price action. Make sure you're watching multiple time frames. Make sure it supports your thesis as well. I will take a look here. Sorry about that. We'll flip back to Iris. So yeah, just looking, obviously, this is kind of what I'm concerned about on the low time frame. We see the DMI curling back up bearishly. We see a bearish cross of the stock RSI. MACD on the 1 hour, also on the 4 hour, also kind of curling back towards that bearish cross. Green histogram might flip, and again, lower high on the RSI curling down. So on the low time frame, I think Iris Energy has some correcting to do, has some consolidation to do, but I am going to look to add to my position kind of at those areas that I mentioned, because again, I do believe in Iris Energy quite heavily going forward. I think they have massive potential in the AI HPC front, as well as they've shown consistent strength and execution in the Bitcoin mining front. They've really kind of shown themselves as a very successful data center operator, as well as scaling their operations much faster than a lot of other peers. So again, Iris Energy, one of my higher conviction miners going forward, definitely probably one of my higher, one of the high AI hybrid miners for sure, as well as overall in terms of my own portfolio. They're my second largest miner after CleanSpark. I'm really bullish on them going forward. Love what management has done so far, and I'm excited for the future and the continued execution of their strategy. And hopefully we do see kind of that advancement in the AI deal front, garnish that premium on the stock, and really see Iris go on to outperform, just as they did prior when they ran from 5 exahash to 30 exahash. They went from about, like $2-ish to, $15 or more. So a massive run by Iris Energy. Has kind of been underperforming lately, but that happens. You go on these massive outperformance legs, then you do have to go through times of underperformance or consolidation. But again, we don't focus on irrational price action. We focus on the strong fundamentals, the cheap valuations. We position ourselves and then we ride those trends. So if you like the content, guys, if you learned something new, again, please like, share, subscribe. If you want access to this document here, just go to the description. You can check out the Google Drive. It's all available there for free. Everything that I do is all for free for you guys. It'll never be behind any kind of pay or anything like that. So yeah, thank you very much for supporting me, and I'll see you guys in the next one.